Thanks for taking time and joining us today on this interesting topic, which is getting a lot of attention in the banking space. So we are very happy to present subject experts from different geographies to share their thoughts today. And I'm happy to welcome all of you to this program on open banking, prospects and possibilities for the future of banking and finance. We are happy to have three subject experts from different perspectives or technologies. One from Standard Chartered Singapore, the division called Nexus. We have Sachin Sharma joining from Standard Chartered. We have Emir joining from Tarabat Gateway from Bahrain. We have Ihsan Al Haik joining us from UAE, from a startup organization in the fintech space, Tpp. So I'd like to welcome our director, Dr. Neil. Dr. Neil takes care of AIBFS learning initiatives. He's heading the academic as well as learning division. Over to you, Dr. Neil, for your opening remarks.
Thank you very much, Shubi. Please allow me to thank everybody that's joined us today, especially the panel members. I really appreciate your time and effort, and I know everybody is busy, so to come and take 2 hours out of your day to come and talk on a topic that's probably very, very unknown to a lot of people, I think it's really appreciated. Then obviously I would like to thank everybody that's joined us in this webinar from outside of EIBFS, even people that joined us aside from the UAE, all very, very welcome. Talking about open banking, I think in life we have seen many things that have been earth-shattering for finance and for economics all along, and I think open banking is just one of those things that's going to transform the industry and lead to massive customization. I mean, if you compare to what happens to Amazon and Facebook, because every time you try to search something, you get all these adverts that says, let's recommend this is what you should do. So I think open banking is going to really play a big role in the way that we do banking and finance going forward. I think in the Middle East, we have seen two approaches when it comes to open banking. We've seen the open banking, the regulatory backed format, in countries like Bahrain, where banks follow the regulator and they build the API, or then we have places where there's no real framework, where the industry is then develop their own API. So basically they go and sit down and they think out and they try to find solutions for current problems within the industry. And that's the case being currently in the Saudi Arabia and the UAE, where the platform then is based on innovation from day one, from the industry point of view, not from the regulator's point of view. I'm glad to have both sides of this debate present in this conversation today. I think on the sort of regulatory side, we have the Tarabat Gateway that's busy in Bahrain with their regulatory side. And then obviously on the sort of call it the non-regulatory side or the market-driven viewpoint, we have then Tpp, that's a startup in Abu Dhabi that looks from a more innovation side. And then obviously from Singapore, we have the Standard Chartered Nexus development. So I think we're going to have a very good discussion today. I think we're going to look at very different points of views. I actually said to Phoebe before the thing, perhaps we should have a question this morning on what is open banking, and let everybody pick and then see at the end of the conversation who was right and who was wrong. But I've now talked a lot. I think let me pass you to either Phoebe or Shihas, who will introduce the panel members, and then I'll speak to you later. Thank you very much, Phoebe.
Thank you, Dr. Neil. Good morning again, everyone, for joining the call today. We are nearly 100 participants in the call right now, and feel free to share in the chat where you are joining from. And I will be happy to introduce the session moderator for today. So in the chat, please introduce where you are joining from. It will be helpful, as well as Dr. Neil mentioned, what is open banking to you? So if you can just mention what is open banking to you in one or two words, please feel free to share that. So thank you again. And I like to welcome Dr. Suyash. Dr. Suyash is our head of academics and senior faculty member of AIBFS. And he's someone who is always in a couple of television media outlets like CNN News 18 and CNBC TV 18, often sharing his economic and financial aspects or thoughts, often in various programs. He's also someone who holds patent and someone who is very what we call subject experts in design thinking, bringing in behavioral finance also in his session. So I'm excited, and he's the best person, the subject expert who will be able to take us through this journey. And on a separate note, feel free to bring in the questions in the chat, as well as the Q&A part, where you have any questions. We will be taking those questions as and when we approach the discussion, and half an hour is specifically allocated for that. So Dr. Suyash, over to you.
Thank you, Phoebe, for the generous introduction. After listening to that, even I felt like meeting that person. But anyway, I'm really honored to curate this session. We have 3 flag bearers from the industry, each representing different aspect of open banking. So before we go to the session, let me introduce briefly each of our panel members. We have Sachin Sharma, who's Chief Product Officer at Standard Chartered Nexus. And as he calls, I think you can see in his background, it says plug and play banking or banking as a service proposition. A very interesting aspect. We'll also discuss briefly about the 3 models that are there in open banking. And he would bring a very rich insight from Singapore as a market. And I think Standard Chartered has initiated the first open banking platform in Indonesia, or started with that initiative, and then they plan to expand to Southeast Asia and probably in other markets. So thank you, Sachin, for giving us that perspective. And then we have Emir, who's from Tarabat Gateway, and it's a very interesting representation that he's going to make from a Bahrain perspective, and not only Bahrain but also Middle East and North Africa aspect. But more interestingly, because the regulatory framework, and I believe they have played some very crucial role in initiating the open banking as a platform to and introduced to probably Middle East and North Africa region. And Amir has a rich experience of working with as an investment banker with Morgan Stanley and Merrill Lynch in New York, and then probably found his passion in fintech, and that's how we saw him. Luckily, we have him in Middle East and North Africa region, where he's currently based in Bahrain. And we have Ihsan Al-Haik from Tpp, and this is our homegrown startup, and we would like to take or probably take some pride in introducing him. I believe they're based in ADGM in Abu Dhabi, and they represent a very different framework, which is also very interesting. And also from a Middle East and North Africa region perspective, first of its kind, a marketplace-based model where there's no regulatory push. So nobody tells you what to do, but you have to wear your own thinking hat and then probably come up with different solutions. So I'm very glad to have all 3 different perspectives. And let's begin the webinar with probably on a lighter note. I would say, as many of the panelists before said, what exactly is open banking? So on a lighter note, when I was just discussing with one of my colleagues and saying that we have a webinar on open banking, the colleague got excited and said, "Oh, okay, fine. So you're going to discuss with bankers to keep the branch open, and I hope the branch would be open on Friday and Sunday as well, because I love to go to the branch." And I had pains to explain that it's not about opening up a bank branch, but it's something else. So over to maybe Sachin, if you could just give a context of what exactly, to many who probably may not know what open banking is. What does open banking mean to you? Yeah.
Well, first of all, thanks Suyash and EIBFS for inviting me. This is a very exciting topic. And this is something that I personally in the bank have been working on for almost 3 years now. So it's a good question. What really is open banking? And to define it very simply, it's the ability for third parties in the market, subject to consent of the customer, to initiate transactions and to receive transaction and account related data from a customer's bank account. So that's in brief, in simplistic term, what's the definition of open banking. And as you can imagine, there can be a whole host of new use cases which can be generated out of this capability. And with the digitization which is happening across the world, even in the developed markets, there is very rapid growth of internet, smartphones. Almost everybody across socioeconomic classes have now access to data. This is really a very right time for introduction of open banking, not just in Europe, which is really the flag bearer in terms of at least regulating open banking, but across markets in Africa and Middle East, and we see a lot of it happening now in Southeast Asia as well.
Thank you. Amir, you want to add to that?
Yeah, definitely. Thanks a lot, Dr. Suyash and Phoebe, for the introduction, first of all, and Sachin for the brief on, what exactly open banking is and what kind of possibilities we can unlock in the future, subject to the market dynamics. What we're seeing in the GCC region right now is regulatory entities picking up on regulations that consist of technical specifications, operational guidelines, conformance checklists, case studies, use cases, and really the APIs that will be used that get exchanged from an account data sharing perspective, as well as a payment initiation perspective. So coming from Tarabat Gateway, we were involved in this process early on in Bahrain as a key stakeholder in drafting the regulations here, as well as supporting banks to comply with these API specifications. That's how it started here. And of course, we had to cater to a lot of reiterations of the framework since 2018. And so, of course, that was a challenge, but also provided a lot of learnings in terms of what incoming third-party providers would require from the ecosystem. And what we realized is, whether you're pursuing a regulatory-led approach or whether you're pursuing a market-led approach, they both have their pros and cons. In market-led scenarios, I'm sure Sachin and Ihsan can attest to this. You've got a lot more room for innovation in terms of building new APIs and making sure that stakeholders from either retail perspective or even corporate and SME perspective can benefit from these APIs. Whereas, in the regulatory perspective, we've noticed that it's easier for people to trust in licensed third-party providers because of the security infrastructure that gets put in place that they'd have to comply with to get regulated.
Great. Thank you. And Ihsan, you would like to add to this?
Absolutely. Thank you, Dr. Sayush and Phoebe, for the intro and for the invite. Definitely a pleasure to be here on this panel with a fellow gentleman panelists. So basically, as I think they covered most of the points. It's just very, very important to maybe just going back to the basics, realize that this The open banking is just simply like a set of protocols, technical protocols on a bank level. So it needs to take place from the bank side to enable, as they mentioned, third-party fintech and third-party application to pretty much access the consumer data, which is the age that we live in. Data is a very valuable asset, and for a very long time, your data was kept in like a certain banks with obviously control to this bank. Now with open banking regulations, kind of the goal behind it is to give the data rights back to the consumer and allowing him to give access, limited access to certain regulated third-party applications, for a limited time, to open the door for a wide range of services and more financial transparency and more obviously tailored and custom product for the consumer. So obviously the most successful model so far, and the leader in this space, has been the UK. Here's why, as DAPI, when we first started off in the region, the UAE, in 2019, the story is the co-founder were trying to build their own fintech application. The problem is they were struck with the fact that there is no way to connect with banks on an API level. So there is no easy way to access consumer data. And we believe without this small piece, you cannot really build a fintech ecosystem without a way to connect easily to consumer data, whether it's on the aggregating data or initiating payment. So this is the gap that we try to fill as DAPI, is to bridge the gap between completely no open banking and basically the open banking when it's coming from a regulatory push, similar to the UK or Bahrain, hopefully a successful model soon in Saudi. That's the gap that we try to fill. We try to work around it and approaching it with the innovation and market-led approach, where we remove the technical debt from the bank and very much carry the duty or the technicality to connect with banks and to connect to other fintechs. So that's the approach that we decided to take, and I'm definitely excited to continue the rest of the question.
Right. So just to probably summarize, we have banks have data about customers, maybe credit card or loan or the current account, saving account information. And through an open banking, we bring that data on a common platform, which is a secured way you can give an access to third party to build probably services or product on this data that is available. So if that is what open banking is, then what exactly? The first question that comes to my mind is, why can't bank do something with the data that they have? Why do they need probably a separate location where all this data needs to be dumped, and then probably through maybe a third party could access it? Why can't bank itself have third party or collaborate with them and then give them directly the data and make them work on it? Why do you need all banks to probably come together on a single platform?
Yeah, that's a very good, very good question. So the idea here is that some people have more than one bank account essentially. So the real value is with the network effect. So if you bank with multiple accounts and you want to keep a global pretty much vision on your spending, covering one bank will provide some value, but not the true your financial standing. So it has to come with a network effect. It has to be like a wide spread across the market to enable those fintechs and to enable like a full financial transparency. So that's I think part of the reason why it should be done on a multi-bank level and not a single bank proposition.
I'd also like to add to that, Dr. Suyash.
Yes,
We're seeing a new dynamic unfold as a result of banking institutions and third-party providers being able to connect with each other. In fact, today, it is in certain cases where the bank actually opens up and becomes a third-party provider themselves. We've seen this, with BBVA's open platform, for example, wherein they can actually get licensed themselves and provide these types of services through partnerships wherein they need the technological capabilities of these vendors to support them with bringing solutions to market, or even in-house. So there have been certain use cases globally wherein we've seen, for example, ABN AMRO partnering with Tink to create GRIP, which is a contextual financing solution. Or we've seen in certain use cases, it expands to banking as a service really, wherein I like to call it more of embedding finance on the front layer, whereas on the back end layer, you've got the banks providing services like anything from ranging from custodian accounts to issuing cards to providing access to information. So we've even seen use cases where you've got the brand as a software platform on the front end, like Shopify, that provides financing to their SMEs and merchants, while on the back end they leverage the license holders like the Citibanks or the Goldman Sachs to be able to carry out these KYC functions and provide that credit. And the way that they work together is through accessing that data that shows through Shopify's platform what the likelihood of somebody paying back or defaulting is through these transactional analyses.
Right. Thank you. Sachin, would you like to probably throw some light on what prompted StanChart to jump into this and take an initiative rather than waiting for someone to come and disrupt or the regulator to tell you to do this? So what prompted StanChart to go ahead with this?
Yeah, see, the simple answer is that the marketplace is changing completely. I mean, we see new neobanks entering the market. We see a whole lot of fintech activity, from payments to lending. And we also see a lot of big tech now coming into banking. I mean, you would have seen actually in Southeast Asia, I don't know how much of the audience are following the action here, but you have a lot of big tech such as ride-hailing companies, e-commerce platforms, which are actually applying for banking licenses. So if we have to kind of operate in this changing business environment, one of the emerging or significantly emerging opportunities is banking as a service, which kind of talks to open banking as well. So essentially what we are doing is we are creating a platform. Emir talked about it, but we are pretty much creating a platform where we are able to connect with any large retail ecosystem and embed financial services within their mobile applications or websites or whatever is this front-end interface. So it's a very good example of this is what Apple has done with Goldman Sachs in the US, where Apple is a front end and Goldman Sachs issues a card which is branded as the Apple card. Goldman Sachs still continues to do what the bank is required to do, which is to do the KYC, to do the risk assessment, to hold the account in their balance sheet, to do the collections, and to do all the regulatory reporting. And Apple is able to now offer a completely new service to their customers, which is an Apple card, within their own Apple wallet, within their branding, within the value proposition that they have created, of course, partnering that with Goldman Sachs. Now, just take this a little bit forward, right? Where do companies such as Taraboot and Dapi come in? If Goldman Sachs really needs to expand, let's say, payments across multiple partners, it's a pretty big slog. You have to kind of go and strike partnerships and deals and expose your APIs, do the testing, make them secure across a whole lot of partners. That is a problem that with which Emir and Ehsan can actually solve for banks, whereas they create a secure layer, which in many instances, many markets will be regulated. In many markets will not be regulated, but will be still holding themselves to very high standards, and the banks would kind of review how secure they are. And then we go and integrate our APIs into their platform, and therefore facilitate the ability for third parties to actually access these banking products. And in our case, we are even happy to kind of white label it for them. So it doesn't have to be a SC branded bank account. It can be an Amazon branded bank account. It can be a Facebook branded bank account in the future. So that's how we see this emerging. We see this as a massive opportunity, and that's why we've put our stake in the ground now to take advantage of it.
Great. Thank you. With this, I believe the first question that also comes to my mind when we talk about having all this on a single platform, both from a bank's perspective as well as from a customer's perspective. So maybe Ehsan could probably throw some light on it, and then we could have Amir talk on it. If I'm a bank, I may also have this worry that what if someone else takes my data and then probably or even my customers away from me. That's first. And second, from a customer's perspective, I may feel that I mean, the whole world is analyzing me. So why should I throw up my information to someone to probably make an opinion about me? So so can you throw some light and how secure is this? That's the second part to it. Yeah.
Absolutely. So I'll tackle the first question. So yeah, this is the kind of the million-dollar question, right? So when the bank first hear about this, regulation, especially when it's regulatory led, so the central bank will pretty much force the banks to open their API to the public. What is the motive, and is it a threat to the bank? That's the question that's been going, and I feel like the motive behind open banking in the first place by a regulator was to pretty much level the playing field between smaller banks and big banks who forever had like no problem acquiring customer, had some sort of like an advantage being heavily established and very well positioned in the market. So the first motive is to foster competition and to foster innovation by allowing these small banks to pretty much offer tailored services to any user, whether it's a customer of another bank or an existing customer. So I don't think it's a threat for the bank. I think the bank needs to make peace that this is the fact that open banking is imminent, and we need to embrace this kind of change rather than fight it. So one way they can do it is basically by partnering up with those third-party applications to offer competitive services and to offer competitive service for the market itself. I would so think that back to Sashim's point that banks should be worried from Google and Uber and Facebook coming to the market, because they also have a massive trust. They have massive user base, and they can very easily compete on a banking level. Now that we've seen obviously Uber opening accounts for pilots, we've seen Facebook now going with the cross-border remittance, and even like if you take Starbucks in the US with the Starbucks wallet. Starbucks holds more than $1.5 billion in customers' money, and it's all sitting there. They're not paying any interest on it, and that's 1.5. That's larger than few U.S. banks. So the trajectory for big tech giants is obviously to go into embedded finance and start offering these services to a wider audience across the globe. This is where banks really should be worried. But when it comes to open banking, I think the banks themselves, as mentioned by Amir earlier, the banks can be like a service provider as well. And they have an advantage over any newcomer in terms of fintech in the market. They have the trust. So just by the fact that you are a regulated bank institution, you have the trust of the customer, and you can start partnering up with fintech and offering competitive fintech solution to the market, backed up by the trust of being a regulated bank. So you have a far better chance than a new fintech just popped up in the market. So I think a bank can definitely leverage this aspect, the trust that they have with customer and the presence and the branches, etc., and just adjust slightly, partner up with these fintechs. Now, on the consumer side, it's very important also to understand that the access that you give to those third parties are very limited and very, So let's say you're applying for a loan, and you give this company, the third-party regulated entity, you give them limited access to your financial data or your bank statement, essentially, for them to evaluate you and give you a chance that you might not gotten with your existing banks. So you give the consent for a limited access, and you can revoke and stop this access at any time. So it's not like you're putting your data out for anyone to kind of analyze it. It's very limited, very controlled. And here's where the security aspects comes, both on both approaches, really, on a regulatory-led approach and also on the market approach. We make sure that it's always centered across, around your consent as a user, and we have, your best interest in mind, and you have excellent visibility on who's have access to your data and how it's been treated and how it's been utilized.
Yeah, thank you. Amir?
There's three parts to it. I think you've got the regulatory / security part of it. You've got the commercial aspect of it, and then you've got product as well. On the regulatory and security aspect, in terms of even what's mandated by regulation or in general should be recommended as part of a framework, is what Ihsan mentioned earlier, wherein you get a customer's consent wherein you define the levels of access that they would be giving to a licensed third-party provider. And so that would be a conscious call that the customer makes to take control of their own data and be able to understand what they're doing with their funds on a comprehensive level. And with that, when a third-party provider integrates with the bank, there is a deployment. There's a project plan that they execute, which includes the sys testing, the end-to-end configuration testing, the private key, public key exchanges that get stored in the HSM environment and get rotated regularly to ensure that that data and those customer credentials are impenetrable. On the commercial aspect of it, I do believe that the banks end up entering into what we're calling this embedded finance market that's poised to reach $3.6 trillion. And this can happen either through entering in-house, through partnerships, or into the marketplace itself. And really what the marketplace itself will offer is a platform for these banks and these financial service providers to connect to each other in order to exchange services, whether it's through API calls or whether it's through banking services. And this is something that we're seeing already being strategized as part of the product roadmap for banks in the region. They want to enter this space because they know that it's the future of banking, that in terms of banking as an experience, they want to be able to have access to all of the touch points on a banking as a service, banking as a platform, and banking as a third-party provider level. So a lot of them today in their roadmap are including how they can leverage these relationships to be able to enrich their own products in-house, to be able to understand their data better, to be able to offer products to other fintechs that want to go to the market, whether it's through API or whether it's through white label services. And on the payment side, similarly through open banking, they would also be entitled to an issuer revenue without the use of cards, but really what ends up being another additional revenue stream for them to justify the reason why they would want to launch these types of products in the market.
Right. And in fact, I had, thank you for giving an insight on the three formats of service. That's actually my next question. So just for the understanding of the audience, I've just typed and shared it, but Sachin, if you could probably explain this concept of banking as a service. So what does that mean in layman's term, if you want to probably explain that?
Yeah, look, there are a lot of new terminologies which have come in. Banking as a service is one of those. It means different things to different people, but the right definition of it really is, in my mind, is the ability of a bank to offer or to create financial accounts and capabilities on any third-party platform. That's really the definition. We also have a lot of technology players which have the kind of tech stack, but I would prefer to call them banking software as a service rather than banking as a service. If you have to offer banking as a service, you have to be a bank. You have to have the license. So it works when you have a third-party front end. You have a technology layer which is empowering those capabilities, whether it is customer onboarding through digital channels, whether it is risk assessments, whether it is creating the account, whether it is processing transactions. So you need, first of all, you need a layer, a technology layer, which a lot of the old incumbent banks simply don't have. Today, if you walk up to one of the top 3 or 4 banks in any market and say that, can you open an Amazon account tomorrow? Amazon wants to work with you, and can you open an account for Amazon customers? The answer would be no. Even if you're able to open the accounts, the ability to service those accounts and to maintain and to process the transactions, the business model doesn't exist for the incumbent bank. So one is the technology layer which has to be solved. The second is the license and the governance of that license. All of these different aspects have to come together to enable banking as a service, right? So again, just to summarize, banking as a service is an ability of a bank to be able to embed financial products and services into a third-party application. That's exactly what I mean. The definition in my mind, at least, is.
Right. Thank you. And probably Ehsan, if you could talk about banking as third-party provider. What does that mean?
Yeah, so essentially, with the open banking in place, or some similar technologies to open banking that which we're trying to do, once your data be able to share it with a third party. Let's take an example. Again, like a personal financial management application, right? So initially, before a way to connect with bank, they will ask you to log in your spending. You spend a little bit on petrol, you spend on groceries, etc. That's a very complicated process for the user. It's very tedious. However, now you can give limited access to this personal financial management application to view your data almost periodically, and then it will be updated automatically. So they'll be able to fetch your bank statement, they'll be able to fetch your transaction and kind of like give you financial advice, give you a breakdown of how much you're spending, and give you more insightful data on maybe you're paying for your existing loans, you're paying so much, you could change the provider or move into another basically service provider that can give you better terms on your existing loans. This is very difficult to do without a way to connect with banks and retrieve data on a systematic and secure way. That's one of the example for how third-party provider can be connected with the banks on a use case. One of the use cases that we did here in the UAE, we had one remittance application, basically allowing customer to top up their account using credit card. Now we all know that credit cards are extremely expensive. We're talking about 2.5, sometimes 2.9%. So every time a customer sends you $100, you as a company will receive 97.5 just by the fact that you're using cards. The other alternative, cheaper alternative, is to basically enable local bank transfer and ask your customer, hey, could you please send me a local bank transfer to my business account? Now, just think of the logistic and the manual work that needs to be done from a customer level. Every time they need to send money to a company, they need to copy paste the IBAN, the information, the company details, a lot of information just to process this payment. What Tpp does basically, instead of asking the customer to go to his bank, leave the application, go and send the payment from his bank, we kind of bring all banks together to the fintech interface. So you as a user will enter into this remittance application, you will click on bank transfer, you will see the list of banks. We have more than 15 banks here in the UAE available. You can click your bank, log into the bank securely, and then your bank will be connected to this fintech. Afterwards, you can initiate the payment with your consent only. And if the bank asks you for an OTP, or if a bank throw any multi-factor authentication, you can enter that right from the application. Now, this will allow us to initiate bank-to-bank transfer from your personal accounts to the retail accounts, almost zero fee. The business model, we can talk about this later, but basically this fintech platform, after 2 months of using Tpp, they kind of they disabled the option to pay using cards, and they rely completely on just bank-to-bank transfer, because it's cheaper, and it's actually, there are a lot of benefits on reconciliation and logistic. You get paid by cards after 7 days. Here you get paid same day or next day. So the value proposition for the fintech is very obvious. And for the consumer, it's more on convenience, more on security as well. There has been numerous studies in the UK that actually open banking is far more secure than using cards, which the cards can be compromised, the data can be leaked. But with the open banking, if done right, it's actually safer and more efficient for both parties.
Thank you. And Amir, in fact, I wanted you to explain banking as a platform, and I think also an interesting part about banking as an experience. I don't know whether you coined that, or is there a word already available, but yeah, if you could throw light on both of them. Yeah.
Banking as an experience, I would say, is the culmination of all of those other terms that we coined earlier. And in terms of the platform model, really, as Ehsan explained earlier, you've got third-party providers going in to other applications and actually providing those direct connections to more than one bank. And so there's definitely a challenge that I've come to understand in the market when it comes to third-party providers wanting to offer their customer services directly from the bank. So, which is that rather than going to every single bank individually and creating these integrations, they would rather go to a third-party provider that has already done this, right? Because then it quickens their time to market. Because what ends up happening is, your tech stack is not built on integrating to every single bank. You may have a consumer-facing application that leverages these connections, right? That you want to offer to your consumers without having to put in all that legwork. So what we did as Tarabat Gateway starting in Bahrain is we've done that legwork. We've integrated all of the banks with our account information service provider license and our payment initiation service provider license. And so that any TPP that needs to come in and integrate to us can have access to all of those banks, and it will be through the direct integration that we have. Hoping to see the same model emerge in the UAE and in KSA, of course, we've got regulations coming out next year. Now, I want to look at a few use cases in this regard, right? You've got, for example, today, personal financial management. You've got buy now, pay later, and let's even look at e-commerce as well. In personal financial management, it's the same thing that Hassan mentioned earlier, wherein you'd have that list of 15 banks. You'd select the bank that you want to pay from, provide your facial authentication after submitting your consent, and then confirming the payment to go directly from your bank, which then runs on the national payment infrastructure and doesn't go through some of the payment schemas that end up bearing more interchange fees as a result. In terms of accounts, it would be the same thing. You're authenticating yourself, except instead of making a payment, you're actually providing access to your account information so that you can see it all combined from, let's say you have an ENBD account and a FAB account and a RAC Bank account. You'll be able to see your net worth in terms of budgets, liabilities, and assets. In terms of BNPL, I think it's a very interesting use case because it actually combines AIS as well as PIS. On the AIS side, you want to be able to provide the BNPLs that insight in terms of, okay, how much does this customer have on a rolling basis across 12 months in their account to see, is he going to be capable of paying, let's say, I don't know, for example, 15,000 dirhams over 4 installments, or are we going to have to, limit his credit as we mature? Because right now, yes, definitely BNPLs are a lot more open and a lot more open to risk. But eventually, they're going to want to use these smart solutions to create these risk algorithms. And then on the payment side, of course, when a customer is crediting these payments, there will be a variable recurring payment functionality that directly debits the customer's account without them having to go into the application every single time and submit that payment. And, of course, it allows for a lot more of a cost-effective transaction processing fee that the BNPL would have to pay versus conventional methods. Another thing that I mentioned that I noticed as well in terms of remittance, you've got a lot of remittance providers that will actually take that local payment direct to account in the local jurisdiction that they're in instead, and then have that pre-funded account abroad that they can then credit the beneficiary with, which then results in not having to go through that international SWIFT. And then in e-commerce, it's really the same thing, right? You go to perhaps payment gateways, right, that have a large reach, or you go and you acquire merchants yourself, and the value proposition you offer to them is, first of all, that's a direct account settlement. So there's not that T+1 to T+3 basis where you're waiting on your payment from, so your cash flow is quicker. You've got a safer means of payment because the customer has to provide SCA, secure customer authorization, every time they make a payment, which then follows the guidelines that were imprinted when the TPP integrated with the bank. And then thirdly, of course, I think the biggest value proposition here, to be honest, especially with a lot of the other incumbents in the market like Apple Pay, is that you've got a very convenient transaction processing fee that obviously enriches their bottom line.
Right, right. So I see that, you know, all these three formats, and probably one of the key advantage would be on implementing maybe a payment solution using open banking. So maybe if I would like each one of you to probably give a possible use case where, you know, this has been implemented in your case, or probably for a particular client of yours. And I could see probably from business perspective that if I'm exporting something and I have a trade finance requirement from a bank, and how much of hassle it takes if we go through a normal traditional manual route, and how advantageous it would be if you have some open banking or API or a gateway through which if settlement instead of 7 or 8 days, if it can happen in maybe a day or two, it would really solve my problem from a business perspective. So probably each one of you, if you could throw some light on what are the possible use cases in your setup where you have worked with or probably implemented it on your platform. And we'll probably start with Sachin.
So let me pick up on a use case for retail customers, and I'm going to just extend what Emir has already kind of talked about, right? So the most the most common method of payment in developed markets is a debit or a credit card, right? A debit card is issued by a bank. It performs transactions on a Visa or a Master or an Amex network, or in many cases now even local country networks. And then there is an acquiring bank, which basically is the machine that you see at the merchant on which the card is swiped. And then finally, there's a merchant. There is a unit economics for this transaction to happen. So every time I, as a consumer, go to, let's say, a Marks and Spencer and swipe my card, Marks and Spencer actually has to shell out some fees, which is called basically MDR, merchant discounting rate. This is anywhere, depending on how big a merchant you are, anywhere between 2 to 4%, which can be negotiated if you're really big. But yeah, typically merchants will pay around 4% fees, right? And then that fee kind of gets distributed back to the issuing bank, to the bank which has provided the EDC machine on which the card is swiped, and of course, the MasterCard or Visa for providing the network services itself. A lot of the fee that the bank actually generates goes back into generating rewards, cashback, loyalty points, etc. on the card, because all of you use these cards and all of you earn these benefits, right? So what happens in this kind of a payment setup? There is a whole group of merchants which are left out, which basically feel that, you know, this 4% fee is too much for us. Our margins are much lower, and therefore, you know, they end up asking the customers for cash. Now, open banking, one solves for this segment in a big way, or at least the belief is that the merchants will benefit, or the smaller merchants will benefit, because you're going to have an alternative way of payment, which is essentially directly debiting the bank account of the customer rather than going through this traditional card payment process, right? So that is, from a payments point of view, from a retail payments point of view, that is primarily a strong use case, and you can kind of apply this payment process into multiple scenarios. You can be remitting from one country to another. You can be making an online purchase. You can be making a physical purchase. You can kind of replicate it. But the fact is that now with open banking, you have an ability to directly debit your bank account instead of going through this traditional Visa Master route, right? So that is, I think, the simplest way to understand from a payments point of view, how does it kind of help different people. Now, I have my own view in terms of, is this really a big threat for, let's say, a Visa or Master, and is this really going to change the payments landscape completely? I think it's going to benefit overall those consumers who are kind of left out, who either don't have a credit card, or many of the developing markets, you don't even have a bank account. And it is also going to benefit a lot of smaller merchants. But at the same time, the economics of the whole transaction, I think we still need to see how well it emerges for all parties involved. Because we will have to work with a payment layer like what DAPI or Taraboot Gateway can provide. We will obviously need to convince customers that while you can debit your bank account, unlike a credit card or a debit card, you're not going to get any benefits out of it because the bank is really not earning anything. We're probably paying a fee. And the merchants will also have to see whether going with a debit card is better, because when you use a debit card, the bank is actually marketing the merchant. Go and spend on this merchant and you get 1% cashback, right? So all of those things are, I think we still need to see how they play out. There is definitely some immediate benefit, but will it be completely dominating the payments landscape? I think we need to wait.
Right. Thank you. And in fact, I was reading a book called The Business of Platform, and I think banks are now trying to get into this format where they create their rather than getting disrupted, they are creating disruption. And I think I also read in June, Visa bought the open banking platform Tink for $2 billion just to ensure that there is support for them going forward. So yeah, very insightful. And probably Ihsan, if you could share some use cases in this.
Absolutely. So just following up on what Sachin mentioned about the whether open banking will overtake cards one day. I think I personally, I don't think this will be the case. There will always be, cards and open banking rails. Open banking right now, the payment is applicable for certain use cases. For e-commerce, I would say that still the dominant will be cards for a lot of reasons. But for other use cases, if you're, for example, topping up an investment account and we go into the high ticket territory, we're topping up like $10,000, $5,000, definitely you will appreciate the bank transfer and not paying the fee for this big ticket. So I think we'll never replace cards, but it will put some pressure on cards to be like more competitive, now that it's not the absolute monopoly that they enjoyed for a very long time. Now that there's an alternative, I think, again, going back to the competition and going back to, at the end of the day, it's gonna happen to the consumer who's gonna, receive better services and better rates overall. Again, it depends on the use cases, depends on the ticket size, depends on a lot of things. Obviously, now we're working with some limitation when it comes to banks, that we're currently enabling local bank transfer. So if a merchant wants to receive money through the open banking rails, they need to have a business bank account in the market that we service. That's one of the requirements to be able to facilitate the local bank transfer from consumer all the way up to the merchant. So there is some restriction now that maybe as we evolve, we will open the door for cross-border platforms and such to enable this cross-border activities. Now, one of the use cases I mentioned is the remittance application, accepting money and basically improving their margin. The other use cases is powering a fintech application that is not able to exist on a Visa or MasterCard rails. For example, peer-to-peer money transfer. So that be power more than 7 or 8 peer-to-peer money transfer across MENA. And the concept is you're able to send your friend money, for example, just by knowing their mobile number. You don't need to know their banking details, etc. And the transaction will happen from your personal accounts all the way to their personal account in the background using DAPI and using open banking, the structure that we have. So you can send as little as 1 dirham, which is like, almost 27 cents. This is not very feasible with a card scheme, right? So you're not able to be very frequent with cards and send your friend money, for example, small tickets. Also, you have the application that help you, with micro saving, right? So you've seen this concept when if you spend let's say $15, then they will send $2 to your saving accounts. So if you try to do this with card, again, it's not a feasible option. So I think it's pretty much, depends on the use case and depends on the, the ticket size, but overall, it's a good balance to the market, good balance to the ratios. Apart from payment, if we're talking about the data, for example, it's this been mentioned before for buy now, pay later. We have one very big insurance aggregator and credit card, comparing website. They use DAPI to pretty much help you qualify for cards. So the journey before DAPI in the UAE was like, you need to enter your salary details, upload your PDF for 6 months, and wait for a few days until you get a call back from these companies. Now the journey is like, you go, you select your bank, you log in, and DAPI will automatically, with your consent, fetch in 6 month or 12-month worth of your bank statement, pass it to the company in a digital format, not in PDF. So the company is able to run an AI model to do instant income verification. So now while you're browsing on this website, you log into your bank, a minute later, you're eligible for these type of card, you're eligible for a loan, you're eligible for a lot of services. That's the, that's the use cases that we're trying to enable on a pretty much on a daily basis here with that.
Right. And thank you. Amir, you would like to add to it?
Super important to be able to access customer financials, even from a digital marketing perspective. Generally, I think a lot of marketers used to rely on cookies, but with the upcoming regulations, financial transactions are going to be the North Star to understand, what a consumer spends on, what their behavioral patterns are, what their insights are, so that they can, go to them with a very cliche term, but the right product at the right time. In terms of, what you mentioned earlier, why don't banks, try to join this platform model themselves or try to provide services themselves? You're even seeing, like you mentioned earlier, MasterCard acquiring Tink, Visa acquiring Tink, and MasterCard having Finicity under their platform, or their recent acquisition of Alia as well. It's similar to a lot of these other models, right? Amazon started as an e-commerce marketplace, and then they went into cloud services. So, what ends up happening is a lot of these businesses are, of course, going to be looking at innovation, as markets develop further. Similarly, they'll be looking at open banking as the next big space, to get into. On the payments side of it, there's of course a lot of room for corporate, such as these cross-border transactions, or even something that we see as a huge gap in the market, reconciliation as well, by having direct account payments rather than having to trace where the payment came from. A lot of people have expressed their concern on this. Of course, even in trade finance, for example, the payment is one thing, but then pairing it with the smart contracts, the airway bills, that relies more on blockchain technology, something that ICICI has also been developing in parallel. So corporate use cases, first of all, generally I realize that it's a lot slower to be able to action them, and of course a lot more API development needs to happen to be able to carry out these functions seamlessly. I have seen in some cases, in North America, for example, you've got like Rails.ai, wherein they partner with the businesses on one end, and then they integrate with the banks on the other to be able to provide them, those insights on the company, so that they can analyze their financials and better be able to give them access to credit. But it doesn't just end there. The thing about the third-party providers being able to access corporate and even retail level data happens through credit bureaus, for example, as well, right? So then you end up being able to bring a lot more data into the mix. How heavily utilized is a customer on their credit? How much in debt are they? How often do they pay their debts, and what frequency? So you combine that data with the data that they have in their bank accounts as well, and then you provide that to the relevant financial institution. On the payment side, I think e-commerce actually is one of the industries that can definitely benefit from this in the time being. The challenge being that for transactions that do have high ticket values, then it gets a little tricky because the settlement periods become slower. It's subject to a more regulatory checks and flags as well. Whereas, if you find that sweet spot for transactions that are, low to medium value, that aren't subject to a lot of those checks and balances, then you can have that rhythm of direct account settlements and transfers.
Yeah, thank you. In fact, for trade finance, we actually give a lot of, or we have heard a lot about the R3 network and how HSBC has probably gone ahead and implemented some of the solutions in that that format. But when we talk from an open banking perspective, probably I think we did ask about security, but I think we're getting many questions on that. We'll probably address that. Also in terms of reconciliation, I think you touched point on that, but probably explaining, probably Ihsan could explain the peer-to-peer transfer example that you gave. How does, what are the challenges and how do you comply with maybe the AML laws that are there in countries, and probably we'll touch upon that probably going forward. But before we go to the Q&A part, I just wanted to ask one question to all of you, and probably you could, we'll start with Sachin. And what are the challenges when we talk from going forward from, like, we have now known what open banking is, what are the different formats, what are the available use cases. So what next? Like, what do you see are the roadblocks that you see going forward? In near future?
I think we need to go market by market, and like we discussed at the beginning of the session, there is a whole spectrum in terms of is this change regulator led, or is it industry led, or is it somewhere in between? Industry is taking a few steps and then regulator is taking one step. The sooner the market gets to an acceptable standard, the faster will the use cases be enabled, right? So to my mind, if the regulator is really moving forward and defining that standard, it kind of helps the industry players to adhere to it and then start focusing on the use cases. So I think the first challenge is regulatory itself, and in my mind, the regulators should come up with these standards as fast as possible. So that's one thing. We've seen, especially in Asia, even in Singapore, that industry has innovated. So on payments, there are different banks which have come up with their own QR standards. In Indonesia, this is the same story that repeated. In India, the same story that repeated. And then after 2-3 years, when it really became popular, the regulator came and said, sorry, forget about all your standards. This is the standard that you need to follow, right? So you have to undo all of that. It benefits when the regulator comes up with the standard, right? So I think that's one. How is it from a regulatory perspective? Regulation not being clear is a challenge. So that's number one. The second is essentially the speed of the participation itself. So for this really to work, you have to have a meaningful number of banks participate pretty quickly. And again, that's something that can be solved by regulation. I mean, if let's say DAPI comes to Singapore and the top 3 Singapore banks say, hey, we are not interested, we're not going to do this. The fintechs who are looking to utilize their services are going to say, hey, you know what, you're not able to cover 50% of the accounts. So how do we solve for my customer trying to get a holistic view of their finances? We can't do it. We can't do personal finance management because big part of the industry is missing. So how quickly it is adopted once the standards are kind of established is the second thing. Because unless it is regulated, a lot of incumbents may not want to move too quickly on it for various different reasons, right? I think that's the speed of adoption is the second challenge. I think there are some very interesting scenarios coming up in financial services, and I would say DeFi, or what's happening in the cryptocurrency space itself is a very interesting challenge. I mean, I'm watching it very closely, because you may see a very different world in 5 years. If El Salvador has now adopted Bitcoin, how many customers or how many other markets might use Bitcoin or any other cryptocurrency as a standard? And then you know, crypto solves for a lot of these use cases in a completely different way. So so that is going to be an interesting challenge as well. Like, you know, how does open banking come and coexist with DeFi, and whether you know, who kind of takes the lead on it.
Yeah, thank you. And Ehsan, you would like to add to that?
Yeah, I think Sachin covered like a good chunk of the challenges. Really, it's very tailored to the market and based on your approach as a company and what you're trying to do. For us here in the UAE, Jordan, Egypt, Qatar, etc., the market that we operate in, we chose this market because there's no open banking regulation yet. It's kind of like a gray area, and we follow the the market-led approach, and we decided to support these banks and to support these fintechs, bridge the gap between completely no open banking until the regulation comes from the central bank of these markets, until the implementation phase. So we know it's a lengthy process. So if you look at the UK, for example, the banks that, the top 9 banks that were adopting it's kind of like a two-year project. You look at how many employees at the bank, it's a technical debt on the bank side to abide by this regulation. So some of the banks had like more than 100 employees working on just standardizing the API and with the UK approach. Now we see Saudi that it's also going to follow the UK approach. So yes, the mandate have been released last year. Yes, the implementation phase is next year. But the real question is how fast the banks again will be able to adopt and offer this standardized API. That's why we decided to bridge the gap. The other challenge I would see is definitely educating the customer. I mean, it's not very common that you hop into one fintech, even if it's regulated, and you throw in your username and password, right? So there is like a good basically works to be done on the consumer side, explaining the value proposition, explaining the what's in it for them, what's in it for the fintech. But from what we've seen in the UAE, being there in like almost 2 years operating this model, we've been blown away and surprised by the customer adoption. We had like for 1 year, we had the customer base growing almost 30% month to month. People, once they try it once they understand the security behind it, once they understand the type of limited access that they give to this particular fintech, and the fact that they can stop this access at any time. Once they try it, once they see the convenience, they see the use cases that we power with that arrangement, they can never go back. That's what we've seen across the market. I'm hoping that this experience will be able to replicate this across different markets. Definitely open banking is the future, and hand in hand with the banking as a service is definitely the next step for this region. Only then you will be able to build a meaningful fintech ecosystem and to have success stories that reach to international level. Before that, if we're talking no access to data, no cheap way to move fund, no easy way to partner with bank, what Sachin is doing is fantastic job, being that technology layer that, deal with the bank as a backend and then offer you bank services like account opening, digital KYC, and issuing cards, etc. Unless we have these elements in place, we cannot call it a proper fintech ecosystem. And if you look around you, I don't think you can point out only a handful of fintech ecosystem that grow to a meaningful size. One of the other challenges is we operate in a market where it's very fragmented. Each market has their own regulation. I mean, if you look at the UAE, Abu Dhabi, Dubai, and even Sharjah, like they have different regulations, not the one unified body. So we're not, for example, like the US market when you're talking to 350 million customer instantly. Or for example, if you look at the Eurozone with the Euro regime, you'll have automatically access to a wider audience. We don't have that in the MENA region. And that's the problem that we're trying to solve by combining open banking with business banking as a service, is to give the fintech access to audience, which what every fintechs need, right? Let's say you're a fintech in the UAE, your customer, if you capture like 20% of the market, your customer will be a few 100,000 or 1 million by best estimate, right? But this is not enough for any fintech to grow to a meaningful size. You need access to audience. You need to get access to people in Egypt. You need access to people in Qatar. And without these elements in place, without the adoption in place, it will be extremely difficult to do so. Now you look at the dynamics of the market. So Egypt, we're talking about maybe 25% of adults banked. You look at the UAE now, the ratio is 65% banked population. So here's where the need for banking as a service in Egypt, for example, and such market is really high, because they're really hungry for any other, for fintech solution basically, and fintech diversity. And that's what we're hoping to achieve by combining these two approaches together.
Right. Thank you. Ahmed, take on it?
Yeah, definitely fragmented ecosystem we have here, right? I mean, if you look at Europe, for example, you've got the whole EU following PSD2. Whereas here, we've got some quasi-governmental organizations, if you will, that are looking at forming working groups and getting perspectives from the central banking bodies throughout the concerned countries in MENA. So, you've got MENA FinTech Association that actually comes out and publishes these reports and actually recommends. So, Sachin was mentioning earlier, if Ihsan wants to come to Singapore and he wants to integrate to all of the banks, he may have some challenges in doing so. And then fintechs would say, you don't have enough access to the banks that carry majority of the share here. So what happens here is, if you're a service provider in Bahrain, then you have to go to UAE, you have to get licensed there, you have to go to Saudi, you have to get licensed there, you have to set up a compliance office there, you have to set up a country manager over there. Whereas, what MFTA is saying is, why don't we passport these licenses across MENA, so that if you are licensed in Bahrain, for example, then you would be recognized in some of these other jurisdictions. And I think, it goes both ways. I mean, one is in some of these countries, you've got a population, a large segment of them that are unbanked, that need access to basic financial services. But on the other end, you've also got, populations that are highly banked, that are tech savvy enough to understand the benefits of open banking and to be able to, trust in the rigorous requirements that the licensed third-party providers have to go through to be able to have access to their information. In some cases, it would be username and password. In other cases, it's really just a token that's generated through a middle layer integration that a licensed third-party provider has with the bank, therefore does not store any credentials of any kind for. And so what I'm starting to see is new models emerging, wherein you've got even the smallest of small companies, that have API-driven services that provide both a no-code, front end to help fintechs build products quickly, while also giving them access to the back end through those APIs that they've connected to these third-party platforms, and then in essence, a network of banks and other even fintechs and financial institutions through. I mean, if you look in certain cases as well, it's not only banks that, global players like SaltEdge give access to, but they also give access to, actual fintechs like wallets and BNPL apps that you can consolidate your information with. And then this really plays into what a lot of people are calling in this region, ourselves, DAPI, be it Lean, be it Phoenix 22, they'll say one API, X number of countries, right? Because you'll have the same experience across all of those different countries as a fintech to use the developer portal and test your solutions, and then actually sign up for production. And then this is where that marketplace emerges, because for each API that you're calling, they all have different nuances attached to them. For example, if you're refreshing your transaction history, you may pay a certain unit price for each time you do that as a fintech. If you need to process a payment, then you would be paying a certain unit amount for every time you process that payment. If you need access to enriched data for each API call, you would be paying a certain unit amount. And every fintech that provides these services would have a slightly different commercial model that I'm sure with time will probably end up becoming, more uniform as the market develops.
Right. Thank you. So just to give a brief summary, I think regulatory standards is what we need, and probably adaptability. And then as listed out, I think once we have, I think in GCC or especially in UAE, we have a different kind of a challenge. We have maybe high value, low volume transactions. So, I mean, it's a different problem that we're dealing with. But yeah, anyway, just to now move towards the Q&A, I think we have a lot of questions on the data integrity and the security aspect. So let me just go through them, and probably I'll just summarize 2-3 questions together as one, so that it's easy to answer. So there are a couple of questions on how do you ensure that the risk associated from a customer's perspective are mitigated. So when you're aggregating data of so many people and it's sensitive banking information, how do you ensure that there is enough security available so that it doesn't get monetized or probably misused? Anyone can answer. Yeah.
Yeah, so I think I'm going to speak for Tpp, and what we do is like internal practices when it comes to security. So although we aggregate, accounts, or we aggregate banks, etc., but we don't store any customer identifiable data. So essentially, think of us like a funnel that we connect the third-party application directly with the bank account of the customer. The data will flow inside this funnel directly to the regulated third-party application that the customer consented to in the first place. So Tpp as the company, we don't store any data related to the customer, and this is why we're not concerned with, let's say, data residency or all these kind of stuff that needs let's complicate things, because we don't store the data. We pass it directly to the third-party application. Now it's the consumer arrangement with a third-party application that we have no control over, right? So let's say you give a certain mortgage place or another bank access to 6 months worth of data. Now, once the data is there, the bank or the third party is free to save it on their end, but it's not going to be saved on Tpp. So at any point in time, Tpp has no data related to customer at any point in time in our database. So that's the first thing that we do. Maybe for other players, maybe they aggregate and then they offer different services. But I'm speaking about Tpp. This is how we do things internally. And then the other piece of the when it comes to security, the way that we handle user credentials. So let's say you signed up, you connected your bank with this fintech application. The next day, you don't have to connect it again. Your account is there. And you can obviously add multiple bank accounts as well, making it easy for you to choose, hey, today I want to pay from my current account at ADCB. Tomorrow I want to pay from my saving accounts at Emirates NBD. We show you the real-time balance of all of your accounts in one page inside the fintech application. You get to choose, and then again, everything happened from a consent basis. So to summarize this, Tpp is not allowed to use its own product. So it's all has to be initiated by the customer through the customer consent, and the customer need to also abide by the bank level security, being multi-factor authentication, a CAPTCHA secret question. This is all still in place and acting as an extra layer of security on top of what we offer. So these are the things that I can think of top of my mind. One last thing when it comes to customer credential. I know this question always pops up, like what happened after I enter my username and password? Why, for Tpp, what we do is we encrypt those 2 pieces of information immediately. We don't store it anyway in exposed format, and we lock these keys. We lock this credential with 3 identical keys. So one key will be stored with Tpp, basically, servers. The second key will be stored at the fintech server, and the third key will be stored at the local device of the user. So only by providing these 3 keys together at certain time, at certain flow, you'll be able to send those credentials to the bank and to authenticate the user. So let's say Tpp database got hacked completely the next day. All the keys are exposed. Well, nothing is going to happen really, because it's only one piece of the puzzle. In order to attack somebody's or abuse somebody's credential, you would need to hack Tpp entirely, extract the first key, hack the fintech entirely and extract the second key. And also eventually you need to possess the local device of the customer and reverse engineer it to basically extract the third key. Only then, after exposing 2 servers, you get access to one single customer. The rest will be completely safe, because we use identical key for every user, for every fintech, for every arrangement. So we've displayed this obviously to a lot of regulators, a lot of banks and multiple markets, and they approve that this is extremely secure level. It's a combination of in-house and out-house, basically technology that we're happy to share with anyone who's interested to know how we handle user secret and how we manage the flow from login to initiating the payment and how we manage customer consent. We're happy to do that, perhaps on a follow-up, personal call, or we'll be happy to do so anytime.
Yeah. Amir, I would like to ask you this question, extending to the response that Ehsan gave with regards to customers' data and the risk associated. So is there any, so one of the questions is around this, what is central bank doing to probably ensure that customers' data is not at risk? So is there any framework, or is there something which is made mandated, that who owns that data basically, and how do you ensure that that doesn't get misused? So can you throw some light on that?
Yeah, definitely. I mean, look, in any case whatsoever, there will always be data protection laws in any jurisdiction that prevent against the misuse of personally identifiable information, or really anything that exposes a customer's data. I can talk from what we've done as well, both on a project level as well as on a regulatory level. See, the Central Bank of Bahrain has released the Bahrain Open Banking Framework, which covers API specifications. Okay, that's how you exchange and call the APIs. Conformance checklists, which actually evaluate everything from what the performance is for each API call, how quick was it in terms of time to last byte, and then operational guidelines framework that talks about or that really provides an oversight in terms of how data can be used across the institutions. And so whenever we have an engagement with a bank in terms of integrating with them, we sign what's called the Tpp Access Agreement directly with the bank. So the bank actually shares in that liability with us, right? So what it enables us to do is, yes, we can access that information through a middleware integration, but all of that information is encrypted and at rest through these REST APIs. And so during this process, we generally, of course, as any bank will do, we receive these security vendor questionnaires, right? And it asks us for everything from what kind of cloud our platform runs on, what kind of certifications we have, what kind of cybersecurity measures we have, if we have any insurance frameworks in place in case of any cybersecurity attacks. And these forms generally have like 300 questions that I generally don't we have our InfoSec team really go through. So of course, as an organization to be licensed, when we went through the sandbox process with the CBB, we had to ensure that we had all of these controls in place so that then we can actually access the bank environments. Now, even in terms of accessing data, it's similar, right? You don't access any personal identifiable information. You can just access some data and turn it into insights in terms of, for example, you can see if a customer has an idle amount of money sitting in an account every month, then you can perhaps send them a push notification to put it into an account that will be interest bearing. The tokens, work in a way where we've got a private public exchange with the bank on one end. There's of course the customer's device, and then the third party provider in between as well. And so to get access to this information, generally you would need to be licensed as a third party provider. And if not, then there may in the future be some workarounds like they do in UK open banking regulations as an RAISP, for example, where you can leverage off of another AISP to get access to data and insights. Otherwise, there would have to be some kind of workaround wherein you can provide this information to a fintech in an anonymized manner. But that would be subject to approvals by the central banking authorities.
Right. Sachin, I would like you to probably explain this aspect related to KYC, AML, fraud regulation, especially from a cross-border transaction. So if we hypothetically, if we have a open banking platform in place and used for payments, and there is a cross-border transaction which happens, how are these things then, or taken care of?
Okay, so let me break it down, right? So let's take your example where you're saying that there is a fintech, which is essentially has access or is enabling the debit of a bank account, subject to, of course, customers' consent. And then let's see how all of these requirements kind of get met, right? The first is the KYC itself. Since it's a bank account, the bank is completely obligated to complete the KYC. Right? So that's the first step. Then the second step that the bank is again obligated to do is to do the transaction monitoring, as to really what debits or credits are happening in this particular account. And if it is a fintech which is processing international payments, then again the bank is obligated to be able to recognize that this particular debit has happened because there is an international transaction involved, and continue to monitor the account for whatever activity is happening on the bank side. Okay? So that those regulations and those standards are fairly well established, and I really don't see any significant changes that bank have to do to meet those standards. Now, of course, if you're a fintech which is processing these transactions, again, it's a question of regulation, right? What is your obligation in terms of having a consolidated view of the transactions which are going through your channel, right? Because I, as Bank One, will only know what is happening in my account, but the fintech might see that this particular customer is using 10 different accounts and he's sending money to ABC countries, right? And that's something that they need to monitor. So I think to that extent, again, the demarcation on KYC and AML and transaction monitoring is pretty clear. And I don't see too much of an incremental burden on banks to meet any new requirements out of open banking specifically, because we are kind of already doing that.
Right. And about fraud regulation?
So see, fraud can be of multiple types, right? I mean, I was quite happy to hear Ehsan describe the security capabilities that they've implemented. This is a very, very important subject for banks, and I might use the word that banks are paranoid about fraud, especially transaction fraud, and that's the reason why Emir and his team have received very long documents to be filled up for the security assessment, because that's a reality, right? That's something that we have to live with. While we are talking about all of these API integration, open banking, if you look at the PSD2 regulation, it is very specific and clear and detailed in terms of the security standards that all parties need to maintain. Because it's one of the key aspects of making this really work. If I, as a consumer, have a bad experience with one fintech, and I say, hey, you know what, I had given my consent and my account got debited without proper authentication, then that's the end of it. You will lose consumer trust, you will lose regulatory trust, and for the bank, that is of paramount importance. But again, what we would like, while banks have their own pretty detailed standards in terms of working with third party or even the middle layer providers, we would again like to see a good regulatory standard emerge where all parties kind of follow and adhere to it. As a standard, the implementations that we are doing is kind of already following what PSD2 has defined. Sure. Even though a specific market has not come up with the regulation, that is the standard that we are trying to follow, because we feel that that's a pretty well established and thought through standard now. And it's likely that many other regulators are going to kind of draw in from the same security standard. So so that's a combination of our own standards and regulation is how we are trying to protect against fraud.
Yeah, thank you very much, and thank you for your thoughts on this. And I think I thoroughly enjoyed asking questions. So I hope I can see the chat box is on fire actually. So I hope nobody has to have a Panadol after this session. So, but it was really an interesting conversation and enlightening all of us on open banking. So thank you for to all the panelists and the audience. And Phoebe, do you want to say some last words?
Yeah, I like to take a group picture and just if you can look into the camera, that will be helpful. And I'd like to invite Dr. Neil for the closing remarks. So, Dr. Neil.
Thank you, everybody. I think Shihas has already done the speech. I was preparing myself. But let me just start off by thanking Shihas for actually running a brilliant session today. Let me thank the panel members for a brilliant discussion. I think it was very open-minded, and I think we all got something to take home. And then I want to say thank you to Phoebe, because I think without Phoebe sitting here every day and sorting this out, we will also struggle a bit. And then the last guys, the guys in the back office at EIBFS, the IT guys, thank you very much. Thanks for everybody who joined us. Have a lovely day, and hopefully see you soon. Thank you very much. Cheers.
And before closing, Amjad, you can release that poll, and thank you every participant for taking time to join. And if you can just give a quick feedback in that poll, it will be definitely helpful from your mobile devices or laptops. Just I take this opportunity for like Sachin as well as Emir, Ihsan, for collaborating, because you spend a lot of time with us setting and doing the briefing sessions, that mock sessions and all this stuff. And thank you, everyone. So wishing you all a wonderful day, a wonderful evening back in Singapore, Sachin. And thank you all for the participants at a later date. So please.
Thank you all.
Thank you.
Please follow.
Bye.
Yeah, so please follow us, EIBFS in LinkedIn or Twitter or other platforms, so you'll be able to get an update. So thank you again.
Thank you, everyone. Thank you, Dr. Neil. Thank you, Sachin.
Thank you for having me.
Cheers, guys.
Pleasure meeting everyone. Bye-bye.
Take care.